Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Well, we had another impressive session after we thought the party was to the upside after yesterday's move based on some fundamental good news on the trade front. Today, the market globally got concerned about the possibility of hitting a new recession, and the whole move was completely reversed plus some. Now, on the monthly, the S&P 500 remains sub 2900, and it hasn't changed much in the last week. But on the daily, we clearly see how we move lower below 2900, reversing the whole move from yesterday and heading back to the 2820 area. It is important to note that yesterday we did trade above last week's high, but having failed in the way that we failed today and heading back down now, if we take that 3, 6, 7, 8 day balancing range, we are heading clearly to the downside, which, as we have mentioned several times before, has relatively poor, or let's say almost non-existent excess. So I will not be surprised if in tomorrow and then very soon we reach this area, and the question mark is what will happen then. If we take it, if we will accelerate or if we'll get some type of support and excess and will remain balancing in the proximity of the wall, 2800, 2900. If we look at the market profile, we see early in the session we opened right at the bottom of yesterday's profile, which by itself was very bearish. I was very cautious this morning because opening here obviously is very bearish, but having such an extensive move overnight, you may expect some type of correction or inventory adjustment. So I was patient, and there was a lot of back and forth. And this looks small on the screen, but 76 to 90, that's a good 15 handle range right there. So it was at the end of the C period that we broke below Monday and Tuesday low. And after that, that double distribution held through the day, and well, the rest is history. Now, some important details on this move. If we look closer, yes, C period, D period open, held it, kept the double distribution and accelerated on the way down. Then we approach the next reference. If I scroll to the left, on the 7th of August, we had a pullback, the F pullback, that was around the 4450 area. Now, we can see that when we approach 4450 around here, that's where the support came in on the G and H period. The interesting thing to me is that you had a move, a very strong move towards that 4450, and then you have a huge pullback on the H period. You consolidate a little bit, and then you don't even reach halfback. That was an important measure. Halfback, well, at the time, halfback was where the blue arrow is. At the end of the day, halfback moved a little bit lower, but you couldn't reach halfback. And then the selling starts again. Now, on the JK period, you move in a straight line, and you stop one tick from the low. Now, the interesting thing here is that stopping one tick from the low, if you were looking at K pulled back almost to 51, 52 area. And then L came in, try again lower, went all the way back up, came all the way down, M open, M try down, try up, try down. M did this back and forth range a few times before closing. Now, at the end of the day, we did get a little bit of an extension from the 41.50, 41.25 that was holding in the morning. But the interesting thing to me is that such an extent backing and filling. We're talking H, the backing and filling was about 20 handles, then K and L 18 handles, back and forth, back and forth, back and forth, and you cannot extend clearly, the easy answer is that the market was getting too short, and it couldn't just sell further. Therefore, the lack of extension. Now, we did get a little bit of an extension, but it will be interesting what will happen tomorrow. Obviously, the focus for the morning will be, I would say, not on the whole value area, although the value area is important, but pay attention to the M high, because this is where L and M couldn't sustain the afternoon pullbacks. So I would say that the focus is on value development relative to the MN range. If you get acceptance above the M high, that will denote change, and that will increase the odds that we retrace a little bit, or we balance a little bit, or we repair a little bit of the profile. Now, if we don't even get there and you get acceptance within here, I think that will increase the odds of an extension. And we need to keep always in mind that we are in very close proximity to the low of the range with no excess, and with the negative sentiment that we have in the markets right now, I wouldn't be surprised. I think the odds favor the downside. Today was just a matter that the overnight was extremely short, and then the session got short itself, and the inventory got really short today, and that's why probably couldn't reach it in one go. But I think that besides the potential short inventory, which could see a little bit of a pullback and a rejection, I think that overall the odds are good that we will reach destination. As you know, anything can happen now. Another important thing to monitor is that this whole bearish sentiment is related to the yield curve inverting, and we need to pay attention because in September we have another FOMC, and whatever you have FOMC members speaking or giving speeches, we need to pay attention if they signal potential actions related to this inversion of the curve. That could trigger some market movement. And at the same time, you know that there's this 2 weeks notice for the talks with China. Also, we need to keep an eye on that. Yesterday, we said President Trump said that he will delay tariffs. Today, the market didn't pay attention to that anymore, and it was more concerned about the global health of the economy. Now, if you start getting some real action from the trade front, and like China saying themselves that yes, they are seeing light at the end of the tunnel, and they will do something, and they will buy the agricultural products, and they will do something, and they see an optimistic path, that could be enough to support the market. On the other hand, if they negate all of this rhetoric from the White House, this can go really hard to the downside. As you know, anything can happen because odds are just odds. Today was a fantastic session to just analyze and pay attention. Again, my take is that this amount of back and forth is enough back and filling to guarantee an extension. Despite the huge move, it could be that the market got extremely short. So let's see what happens next.